Now after trading account, after knowing gross profit and gross loss in trading account, we transfer that gross profit and gross loss to profit and loss account. Okay, in profit and loss account we transfer that amount. So this is the profit and loss account which is prepared after trading account. So here the profit and loss account for the year ended 31st March. Suppose the year ended 31st March 2020. Then you write 31st March 2020. If it is year ended 31st March 2021, then you write the date. This side is your particular, this side is your particular amount. This is for debit, and the same is on credit side, particular amount credit side. So if there is a gross profit, then you write in the credit side. If there is a gross profit, then which side you will write? You write in the credit side by gross profit. This gross profit is brought down from where? Brought down from the trading account. So you write the gross profit over here. If there is a gross loss, then you write the gross loss this side. To gross loss brought down. From where we have brought down? We have brought down from the trading account. So gross loss will be in the debit side, or gross profit will be in the credit side of profit and loss account. Now thereafter we will start the writing this side. Debit side will write all indirect expenses. Indirect expenses like office and administrative expenses, selling and distribution expenses, financial charges, okay, and other expenses and losses. So in debit side we will start with the office and administrative expenses. Suppose office and administrative expenses. So it's a salary. If it is salary, it means this indicates, salary indicate office salary. Salary means office salary, or salary and wages. Salary and wages, if it is given, then also we will write in the debit side of profit and loss account. It's an indirect expenses. Office salary, salary, or salary and wages. Office lighting, okay, office lighting, and only if it is lighting is written, then it is office lighting. Unless it is mentioned factory lighting, then factory lighting will be in the trading account, and only lighting, it means it's a office lighting. So lighting or office lighting will be in the debit side of profit and loss account. This side we will write all indirect expenses and losses. Office and administrative, selling and distribution, financial charges, and other expenses and losses. Okay, depreciation of office equipment. Okay, depreciation, you write the depreciation over here of depreciation of office equipment or machinery, है ना, depreciation. And fixed asset, depreciation on fixed assets. Depreciation on fixed assets. Stationery and printing. Stationery and printing is indirect expenses. Postage and telegram is indirect expenses, postage and telegram, refreshment, audit fees, these are office and administrative expenses. Legal charges, these are the indirect expense coming under the office. Insurance premium, then coming to the selling and distribution expenses like advertisement, selling and distribution expenses, carries outward, export duty, free sample, okay, commission or brokerage, packing charges, delivery van expenses, delivery van expenses, okay, delivery van expenses, stable expenses, okay, trade expenses. Then you come to the discount allowed, loss on sale of assets, of any assets, loss on sale of assets, charity, goods given as charity, donations, okay, interest on loan, So trade expenses, stable expenses, trade expenses, discount allowed, loss on sale of assets, charity, donation, interest on loan, okay, any financial charges, conveyance, expense on conveyance, okay, entertainment expenses, bank charges, So write all indirect expense in the debit side, all indirect expenses related to office and administrative, selling and distributions, financial charges, other expenses and losses. We will write in the debit side all revenue, expenses and losses other than which is written in the trading account. In trading account debit side we have written the direct expense, all direct expenses. In profit and loss account debit side we will write all indirect expenses and losses. So under the indirect expenses, if you categorized it, so it's a office and administrative, selling and distribution, financial charges and other expenses and losses. So you write all these things over here in the debit side, okay, in the debit side. Then you can write bad dates is another thing. Bad dates, bad dates, bad dates, okay, bad dates. It's related to selling and distribution. Telephone expenses, telephone expenses, telephone or internet expenses, telephone or internet expense, expense on internet, expense on internet, expense on internet, expense on internet. So write all expenses, indirect expenses and losses. Under indirect expenses, if you categorized office and administrative expenses, selling and distribution expenses, financial charges, loss on sale of assets, okay, depreciations, this will come depreciation or any other indirect expenses, we will write in the debit side of profit and loss account to calculate the net profit. Now coming to the credit side, we will write all indirect income in the credit side of profit and loss account. This side is your income side, all indirect income. First, if the gross profit is there, then we'll write the gross profit brought down from the trading account, and thereafter we'll write all indirect expenses like discount received, discount received, bad dates recovered, bad dates recovered, commission received, commission received. It means if the commission have a credit balance, discount have a credit balance, rent received, rent have a credit balance, it means it is a rent received, interest received, interest received, okay, interest received, dividend received, dividend received, sale of scrap, sale of scrap, profit on sale of assets, profit or gain, you can write gain on sale of assets, gain on sale of assets, gain on sale of assets, okay, gain on sale of assets. Interest on investment, next is interest on investments, investments, interest on investment. All indirect income we will write in the credit side, all indirect income. Any miscellaneous income, you write any other miscellaneous income. So we'll write all the indirect incomes and gains in the credit side. Indirect incomes and gains will be in the credit side, indirect expenses and losses will be in the debit side. So you write it over here, okay, and thereafter we'll do the comparison, which side is more and which side is less, okay, which side is more and which side is less. You write the figure here, indirect expenses and losses and other expenses, you write this side, indirect incomes and gains this side, and thereafter we'll do the comparison. What we'll do, we'll see which side total is more, which side total is more, debit side or credit side, which side total is more. Now thereafter we'll see which side total is more, credit side So if the credit side total is more, you do the total of credit side first. Okay, you do the total of credit side first and put the difference over here. That difference indicate the net profit. Net profit transfer to capital account. Transfer to which account? Transfer to capital account. Net profit transfer to capital account. This is the difference amount. If the debit side total is more and credit side total is less, then the difference will be net loss. And this will also be transferred to net loss, transfer to capital account. So depending upon which side total is more, if credit side means income side total is more and expense side is less, then it's a net profit, and this net profit will be transferred to capital account. And if the debit side total means expense side total is more and income side is less, then the difference will be, this difference will be indicating net loss. This will also be transferred to capital account. Is it clear? Now come to the journal entries related to profit and loss account, how these ledgers are closed. So you see the profit and loss is debit and these are credited. So entry will be profit and loss account debit to all these expenses right from salary to last, we will close it. All indirect expenses like salary, rent, insurance, okay, this will be closed. Depreciation, donations, the ledger of these ledger will be closed. You write the profit and loss debit and credit all the expenses right from salary to telephone and expenses. Whatever the expenses, indirect expenses and losses, you write here to and close it. So indirect expenses and losses and other expenses are closed by way of transferring to the profit and loss account. Similarly, all incomes, all these income right from discount received to miscellaneous income, we will close it. We will write discount received account debit, discount received account debit, bad debts recovered account debit. You write all the indirect incomes and gains in the debit, commission account debit, interest received account debit, interest received account debit to profit and loss account. Transfer it to the profit and loss account. You transfer, you write all these account in the debit and transfer to profit and loss account, means all indirect incomes will be, ledger will be closed by transferring the balance amount to profit and loss account. All direct income and direct expense account will be closed by transferring the balance to trading account. Is it clear? Transfer to trading account. If the profit is there, then profit and loss account debit to capital account for profit, capital account, and this is for profit, this is for net profit, which is transferred to capital account. And if there is a loss, then capital account debit to profit and loss account. This one transferred to capital account, so capital account debit to profit and loss account for loss, for net loss. Is it clear? So In profit and loss account, debit to all indirect expenses and losses. This will be closed by transferring the balance to profit and loss. All indirect incomes and gains will be debit and transferred to profit and loss. Net profit will be transferred to capital account, profit and loss to capital, and net loss will be also be transferred to capital account. So capital account debit to PL account. Talking about this, net loss transferred to capital account. So capital account debit to profit and loss account. So ledger of nominal accounts will be closed. All ledger of nominal account will be closed. If it's a direct income and direct expense, then the ledger of direct income and direct expense will be closed by transferring to trading account. And if it is a indirect incomes and gains and other expenses and losses, then this will be also transferred to profit and loss account. This will be transferred to profit and loss account. Is it clear? So this is the journal related to profit and loss account and indirect expenses and losses and indirect incomes and gains.